Loretta Mester, the Cleveland Federal Reserve president, says she is not adjusting her policy stance because of the recent market drop. However, she goes on to say that a prolonged market downturn, which would include a buildup in risk, would affect U.S. economic data and, by inference, could affect her outlook. She sees no signs of a pending U.S. recession and says the underlying U.S. economy is strong. She's among the first, maybe the first, to talk about the recent market drop and the effect, or in this case, no effect, on her policy stance. But overall, amid this decline, Melissa, each Fed person has come out and said pretty much they're sticking to their forecast despite what's been happening with stocks. Melissa?
Does that surprise you, Steve? I mean, it seems to be sort of in line with what you would think the Fed would do. And at the same time, from an investor standpoint, you want to hear the Fed being more receptive to other data points that exist out there, including not just what the stock market is saying, but what corporate America is saying about the environment.
I think that's right. And by the way, coming up in about 35 minutes, we'll get the Beige Book and we'll get some sense of what the Fed is hearing from individual companies and individual anecdotes that are out there. But no, this is not the kind of magnitude of market sell-off that I think creates economic realities that change the more important data points the Federal Reserve looks at, like GDP, inflation, and employment, Melissa.